Joining us now to discuss is Laura Chico, Wedbush Managing Director and Senior Biotech Analyst. There's been a lot of deal making. Welcome, first off, Laura. There's been a lot of deal making in this area. Do you think it's going to slow down or keep a pace?
Thanks, Tyler. Yeah, I think this is a trend we've been seeing a lot of this year and even from the end of last year. So from December to now, we've had over 11 deals, over $35 billion in transactions announced. I don't think it's going to stop anytime soon. Large cap pharma biotech do have exclusivity expiries that they have coming up that they need to address, also looking for revenue growth. And a great spot to look is in the small and mid cap biotech space for assets that might be a little bit more de-risked.
Are there certain areas in the biotech environment that would be more prone to be involved in buyouts, or is it just, it's lots of different discrete, individualized scenarios?
That's a great question. And I think obviously obesity has been a really big theme in 2023. Will probably continue for the foreseeable future. But across the area, at least in these recent M&A transactions, it's been pretty broad-based, and I think that's really a testament to the innovation in the space. We have a number of deals in oncology, immunology, inflammation, neuro, and even rare diseases. So it's not just within certain verticals at this point.
I have to say, Laura, I really, in a way, admire your job because I think it can be really tough to pick biotech stocks, right? You can take a lot of risk and there could be a lot of reward for that, but also, of course, it goes the other way. And so if you're an investor and you're looking in this space, I know you just kind of went through obesity and we've all heard about that craze. Oncology, of course, that's important too. But if you're evaluating these companies that are developing these drugs, what should you know about the possibility of FDA approval or not? It seems like that's sort of the biggest risk potentially when you're looking at some of these names.
Oh, sure. FDA or regulatory risk is certainly one element. But I would say that in the past year, we've actually had almost a near record approvals from the FDA, over 50 approvals last year alone. And the calendar is not slowing down in 24. So I think there's really good dialogue with the agency and companies in the industry. I think there's also, scientific or clinical risk here. But I think companies are getting smarter about the way they design studies. A focus on rare diseases, for example, helps concentrate or focus down to a specific population that you can deliver value to. So I do think there are some unique ways you can try to find some insights.
We just put up a chart of some of your choices in this area. I think Neurocrine Systems was one. Maybe there were two more. Maybe we can go back to that. Neurocrine Biosciences, Edgewise, and Viridian. I'm guessing that there are not too many people who are watching right now who know anything about those companies. So I invite you to tell us.
Absolutely. Well, let's start with Neurocrine. This is a larger cap name, actually, with a commercial product, Ingrezza, for tardive dyskinesia. And one of the reasons we like this is the tardive dyskinesia market is only diagnosed about 35% of the patients, but Ingrezza is already at over a $2 billion run rate right now. And beyond Ingrezza, Neurocrine is advancing another orphan disease product called crinecerfont, which should be in the market hopefully by 2025. So a lot to like here with Neurocrine, a focus in the neurology and endocrine areas right now.